Hi and welcome to Trade of the Week. I was spoilt for choice this week, but the trade I've gone for was a rare trade in gold. This trade shows how to use support and resistance lines to enter a trade with a tight stop loss, but it finishes with an ironic sting in the tail. On Tuesday I wrote that gold was consolidating in a triangular pattern and that a breakout in either direction was imminent. On Wednesday, gold pushed briefly through the upper trend line, touching 1126. This could have been the start of a move higher, but it also shows the value of waiting for a confirmed closing candle. The 30-minute candle closed above the line, but formed a clear shooting star reversal warning. I'll show you that one. Yeah. The subsequent moves saw the price slip back below the trend line. I mentioned on Tuesday that this trend line was gaining in street cred, so I decided to back it with a low-risk trade. Once the RSI dipped below 50, I sold £2 of gold at 1117.7. I don't bet on much size in gold as it's not my natural market. So I dealt there. The whole point of the trade was that I could limit my risk by placing a tight stop loss the other side of the trend line. I placed my stop at 1127, just above the day's high, giving me a small risk of £186 on my £2 bet. Because I had less risk on this trade, I was happy to run it down to a target of 1073. That was a level that acted as support on previous occasions. So what happened? The price quickly moved my way, but attempted to bounce on the US Open. This bounce failed once again at the trend line, and the price edged lower during the afternoon. I felt that the dollar would move higher, so I was happy to run my bet overnight. Thursday saw a gradual trickle lower, but 1102 looked to be holding well until the US weekly jobless numbers came out. A crazy afternoon saw the dollar hit new highs as equities collapsed, and gold fell a further $35. Gold dropped to 1065, but bounced back over the 1073 support line. The intraday RSI was way oversold at 15, so with the price well below the lower Bollinger Band, I decided to take my money off the table, buying back my short at 1074. That was somewhere around there. I made $43.7 on a £2 bet, giving me a profit of £874 for a risk of 186. If only all my trades were like that. So here's the ironic bit. I've been looking to trade the breakout of the triangle, and yet I closed soon after the break was made. Since then the price has fallen a further $24. Still, I think the price will need to return and test the trend line soon, so I'll be looking for another trade there. Have a good weekend and enjoy the rugby.